Hello, everyone. Welcome to another weekly analysis. So, quickly, we'll just run down, what happened last week. We'll run down the predictions for last week. Rather foresight for last week, and then see what happened. So, we had we had an analysis. We had analysis for USGJPY, and I need you to know this. Yeah, I need you to know this that the trend is overall. It's what I'm saying to you. On the daily time frame it might break structure and look bearish, but on the weekly time frame it may just be a reversal or a retracement into a Fibonacci level, and that happens every time in the market, and then people see that and they think, oh, the trend has reversed. No, the overall trend is the monthly time frame, except if we're coming off of an area of interest from the weekly time frame or from the monthly time frame that could give us a range in the market that we could trade off of. Like I said, I take it again, a range that we could what trade off of. Now I'll show you what I mean by range. Now if you look on the higher time frame right here, you'll see that we're basically in a range. We're going up or coming down, we're going up or coming down, and this is very, very what tradable, as so long we just follow the trend of the higher time frame. You see what I'm saying to you? On the monthly time frame, on your JPY, on the monthly time frame, we're obviously bullish, but we're obviously bullish, but the market is stuck in a range. It goes up, comes down, it goes up, it comes down, and it's tradable as long as you follow the higher time frame trend. In this case, is the weekly time frame, and then you must make sure that the daily time frame is also trading in the same direction as the weekly time frame. Now that's how you catch proper trend, and that's how you ride the trend. So for this week, we have a very, very, very strategic bias for USGPY. It's simple. It's the same break and retest. And I remember last week when I said that CAD JPY could as well. Where is CAD JPY? CAD JPY could 1 minute. Let me yeah, CAD JPY could as well open up and then fall all the way to the downside. I said it. I said we might just open and then go all the way to the downside. It may not hold. It may not. Now, I'm not saying, oh, it will not or it's not going to hold. I'm trying to tell you that, I'm trying to show you that there are possibilities that even when you have a specific prediction in the market, it may not hold. So you have to be realistic. You have to be patient, and you have to follow your trading plan. It's important that you follow your trading plan. That's the key to trading, following your trading plan. So on USGPY, because this is basically the only pair I think I've planned for the week, and I'm just waiting for a break of counter trend. And now we have stated that on USGPY we are bullish on the weekly time frame, right? On the weekly time frame, we are on the monthly rather we are bullish, higher high, higher low, higher high. We haven't put in a higher high, so basically this is still a higher low. We are still manufacturing what a higher low. So we are bullish. We go to the weekly time frame to trade in that direction. Now we've seen that, all right, we've come to this, the 140.500 level, free time price and free times rather 1 2. This is the third touch. Now we are establishing that, okay, we could very much want to be looking to buy. We could be looking at a reversal. Now we need now the market will tell you before it reverses. The market will show you, clues, give you a reversal pattern before it starts to go to that direction that we're anticipating. And in this case, it has, on the daily time frame, we have an inverse head and shoulder, lower low, lower high, lower lows, or rather left shoulder, head, right shoulder. And one of my trades, I sold all the way to the downside to this left shoulder, and I bought it all the way to the upside. It's simple, it's textbook, it's high level. So moving forward, we have a price level 144.500. Now you might be wondering how I got this support right here. How I got it was, I use something called funny knife, meaning I look into the past. I don't have to wait for or look for, okay, a break and test of this level. No, I look at the past. I let the past tell me where the market should bounce off of. And how do I do that? I use excuse the plane. I use chart patterns, double tops, double bottom. Now you need to understand, it's not just anything or any level, but so let me show what I mean, right? Let me show what I mean. So this is the range from this point right here to this point right here. This is the range. So if you see this fall all the way to the downside, I need to use areas from the past, from this range to this range, to predict where the market will use to bounce all the way to the upside. It's as simple as that. So on the 4 hour time frame, We have our break, we have our retest on the daily time frame, and now we need a bounce. We need what? A bounce. Now we need our contingency plans to start hitting our confluences to start checking out. We need a counter. We need a break of counter trend line. We need a break of structure. We need these things to happen to execute our first entry. Now we can see that the 1 hour time frame has obviously reversed. This is what I keep saying. Before the market reverses, it will tell you, it will show you, it will give you a reversal pattern. Be it a head and shoulder, be it a double bottom, it will show you. Now we've had a lower low, a lower high, left shoulder, a right shoulder of some sort, and then we've put in a higher high right here. We're looking at putting a higher low until we break this counter trend line and put in a higher high. This is not a higher low. You see what I'm saying? So it may fall all the way down, it may fall even further, we do not know. So we need for USJPY, we need a break of counter trend line. My first entry would be a break of counter trend line, and I risk 1%. I risk 1% because of the prop firm I use. So you cannot risk more than 1%, and that's very good to help practice risk management. It's very, very good. Trust me, it's very good to help you in the long run. So my first entry will be off of the break of the counter trend line. Then my next entry will be at the retest. Now you might be wondering, why not just get in with the full 1% and just hold it to the upside? I'll be able to make more rewards when we retest and I get a bullish engulfing, and then my stop losses become smaller. You see what I'm saying to you? Something like this would happen, right? Something like this will happen, right? So an extension up to the upside. This is my TP, right? And then say for the first entry, this might be my stop loss below this low, right? Below the shoulder, right? And then my entry might be somewhere here after the break. Now if you look, this is just a 2-to-1, right? This is a 2-to-1. Now imagine then the retest comes, right? And then we get a bullish engulfing off of this trend line. Say it stops somewhere around here, right? And then my stop losses then come below the last low, or rather even below the the counter trend line, and then boom, now I have a 4-to-1. Now if I risk the whole 1% in the first entry, I will get just a 2-to-1. But now I have what? A 6-to-1 open. You see what I'm saying to you? And now I'm on the verge of getting what? 3% off of that same 1%. That's how I do it. That's how I would do it. It's not hard. This is what they call adding to your winners. Now, in the past week, I took 2 trades and I lost 2 trades, and I lost 1%, not 2%, 1%. Why? Because I first of all tested the market with 0.5% to see where it's going to go. See if I could add more, and evidently I couldn't add more because it took me out. That's what I'm saying to you. So I lost 1%, not 2%, and that's the beauty of it. Trading is not about trying to make more money off of your off of having a bigger risk. You see what I'm saying to you? It's about managing what you've got. And I've managed my capital and I'm down just 1%. Now, if peradventure I get into this trade the way I have planned it, I'm not gonna plan it, I'm not gonna do anything or execute anything outside of what I've just planned, outside of what I just said. If peradventure I then execute this trade the way I've planned it, I would be up 3-to-1 at the end of the week. Now that will cover up for the 1% loss, and I'm back in the green. You see what I'm saying to you? That's how trading is. This is what it's about. It's about risk management. It's about having proper risk to reward. That's all for this week. We're not gonna stress more on other pairs. We just have one pair. You see what I'm saying? We just have one pair that is at the verge of breaking. We just have to wait. When it breaks, it is going to be a very beautiful trade, a very beautiful run. Trust me. You see what I'm saying? So just follow the plan. We might even plummet all the way to the downside. It could happen, but you have to follow the plan, to the latter rather. So I hope and I pray that you Lord follow your trading plan. It's very important to follow your trading plan. Nothing is more important than following your trading plan. You can have the best strategy from the best traders in the world, and then when you take a loss, you don't know how to react. You see what I'm saying to you? You don't know when to stop because you don't know have their trading plan. You see what I'm saying? So follow your training plan, and I hope and I pray that you Lord continue to grow as we all grow on this channel. So like, subscribe, and leave a comment. Ciao, ciao.